Yes people, what's happening guys? Welcome to my new channel, The Value Investor, which is me. My name's Lewis Amina. Today's video we're going to be talking about Intel and how I think this is a great company. Remember, I'm not a financial advisor or anything like that. I'm just a guy making videos on stocks that I personally love and own, and Intel's one of them. So remember, do your own research and all that malarkey, blah blah blah. But I'll show you how I find value stocks with what has to be the greatest stock tool out there. The tool is provided by a YouTube channel called Everything Money, and in my opinion this is the best financial stock channel on YouTube. I follow a lot of channels, but I've always found that most of them talk about speculative growth stocks, which, don't get me wrong, can be a great way to invest in the market, but it's more of a gamble than an investment. If I can just show you here some of the few people that I follow: Map Money, Financial Education. This is a great channel, but the best that I follow is Everything Money. So as I was saying, a lot of these channels talk about speculative and growth stocks, which could be good. For example, the Teslas and the Palantirs of this world, they're clearly overvalued. And the YouTube channel Everything Money really made me understand that stocks have a true value, and this stock tool is amazing. I think the only way you can get the stock analyzer tool is if you become a Patreon to Everything Money. I'm not promoting them or anything like that. They're not paying me. They don't even know that I exist. So I'm just telling you what I use and how amazing it is. I just go on their YouTube channel. This is what their channel looks like. Let me go on some of the videos, and they just talk about all types of videos, and they use the stock analyzer tool to value the stock and to see if they're overvalued or undervalued. Ideally we want to be buying stocks that are undervalued, of course. So when you start watching these videos, trust me, you'll just be amazed on how they analyze stocks and find the true value of companies. So I'm going to use the tool now just to show you how it works. They use what they call 8 pillars, the 8 most important fundamentals that you should be looking at in a stock, and they call it 8 pillars. They also have the retirement calculator, which is a good little tool. You can put your own portfolio in here, and this is the stock analyzer that tells you how much a company is worth paying today, looking at future growth and stuff like that. But today we're going to be looking at the 8 pillars. If I just click on this, the 8 pillars are: the PE ratio has to be under 20, the revenue growth over the past 5 years has obviously got to be growing, shares outstanding has got to be going down. That, I think shares outstanding is one of the most underrated parts on a stock that people don't really look at. Also, the cash flow, is it growing over the past 5 years, profit margin, net income growth, assets and liabilities, and the price to free cash flow. So all you do is just type in the name of the company you want to be looking at. I want to be looking at Intel. And straight away gives you these options up here: the metrics, which is this and all this information here, the income statements, balance sheets, cash flow, the 8 pillars that I was talking to you about, news, and the stock analyzer. As soon as I go into a stock that I'm looking at and I want to analyze, I go straight to 8 pillars, and straight away you can see all 8 pillars are ticked. Some companies have these X'd out, but Intel has them all ticked. The PE ratio of Intel is 12.24. The profit margin is huge, it's just under 24%. The revenue growth has been growing over the past 5 years. The net income growth over the past 5 years as well. The shares outstanding, they've been buying shares over the past 5 years, and I'm going to go into depth and show you this part. The assets and liabilities are covered, cash flow, growth, and the price to free cash flow as well. They pay a 2.3% dividend, which is amazing. So it shows you here that the dividends that they paid is £5.4 billion, and the free cash flow that they use is 19.2 billion. So they've clearly got enough money to pay dividends If you don't know what free cash flow is, they use free cash flow to pay down debt, pay dividends, make acquisitions. So let's go into the income statement. A lot of people look at the past 5 years. I like to look at the past 9 years and just show you what they've been doing. 67 billion, and it fell to about 53 billion, 52 billion, and from this point onwards the operating revenue has been going up. 56 billion, 56.2 billion, 60 billion, 64 billion, huge sum to 70 billion, 75 billion and 77 billion. So it's just going in the right direction. If I scroll to the very bottom, which is my favourite part, I think, as I said, is underrated, they're buying back their own shares. 5 billion, 4.9, 4.97, 4.7, 4.7. See, it's just going down slowly and slowly. If you have a look at the free cash flow, the average over the past 5 years is 14.6 billion, and it's been growing, as you can see here. Free cash flow has just been growing. It's just a cash flow king, and I just think it's one of the most underrated stocks out there. The price of Intel is $56. Let's see how much Intel should be selling at. We go to the stock analyzer tool, and the good thing about this is it shows you a little video on how to use this stock analyzer tool. But I think I've got a pretty good idea here. It shows you how Intel's been doing over the past 10, 5 and 1 years as well. So what you just do, this is your assumptions, okay? So if you assume, this is your low, mid and high assumptions. So what you put your low assumptions down. So I like to put the lowest number here, so it's 1.6% of growth, revenue growth. The mid, what would you put there for mid? Maybe 3.5%. And the high, this is the high end, because it's going to give you 3 values, you see, of the stock price: the low end, the mid end and the high end. High end, I mean the highest average over 5 years, so let's just put 6. That's even still conservative. The share change, you can see here, this minus means they've been buying back 4.4% of the shares in the past year. So low end, let's say 2.5, minus 2.5 I should say. The mid end, I would say, let's just say 3. Minus 3, that should be. And the high end, let's just say, again being conservative, minus 4, because last year they bought back 4.4%, so let's just say 4. Profit margin has been pretty stable over the years, so let's just say the low end is 18. The mid end is 23, I'd say, and the high end, say 25. The free cash flow, say low end 18, mid say 20, and the high end say 25. Now the PE ratio, say 15, 15, 15. Oh. And the price to free cash flow, 15, 15, 15. As I said, watch this video, will give you more of an in-depth on why they choose these numbers. And desired annual return, you know, what would you like to be returned? What would you like in return per year in this stock? So let's go on the low end, 8, 10, 15. And press analyze to get the stock price. Oh, years of analyze. So over the next 7 years. So press the analyze button, scroll down, and all the information that I've put in here, these are the prices. So the low end price is $61, the mid price is $81, and the high end is $83. So average them out, what? $70. And how much is the stock? Go back. It's $56. So that analyzer tool shows you that this stock is undervalued. Not only is it undervalued, the balance sheet, the income statements, the fundamentals of this company is just unbelievable, and that's why I think it's a sleeping giant. This is one of the most underrated stocks on the market. This is safe. This company is safe, and this is why it's one of my favorite stocks. I've got at the moment I've got 10 stocks in my portfolio, and this is one of them. I'll show you the other stocks. Just let me switch over to my app and I'll show you my portfolio. So this is the portfolio. I currently have about £30,000 in it, and these are the stocks that I own. I've got stamps.com, Facebook, AutoZone, Credit Acceptance, Amgen, Lockheed Martin, Rio Tinto, Checkpoint, Quidel and Intel. I've currently got 61 shares, just under 62 shares of Intel, and I plan in the next couple of days to be buying more of Intel. There's about 5 to 6 more stocks that I've used the analysing tool on, and has come up as great stocks, which I want to be adding as well in the next couple of days. But what I will be doing in the next couple of days is, or coming weeks I should say, is doing a similar video on each one of these stocks, and we'll do another in-depth look on the balance sheets, the shares outstanding, and just see where those stocks are in the market, and if they're undervalued. Well, you know they're going to be undervalued because I'm a value investor, but how undervalued we'll get to see in the next videos. But guys, listen, I appreciate watching the video. Help me grow this channel. I've only got 21 subscribers at the moment, so subscribe, and more importantly, just like it. If you've enjoyed this video, just give us a little like, and I'll see you in the next video. Thanks guys, take care.